Let's talk trash, because in the United States, trash isn't just gross, it's a cash machine. And here's the headline that grabs attention. Bill Gates, through Cascade Investment, holds roughly 35% ownership of Republic Services. Not a small position, a massive one. When people hear waste management, they often think of Waste Management, the company. But Republic Services is the other giant, and here's the interesting part. While Gates, through Cascade, holds about 35% of Republic Services, he holds only about 7% of Waste Management. So at least based on reported ownership, his bigger bet is clearly on RSG. And here's what makes that even more compelling. Gates has reportedly held this stake for decades. And over that time, RSG has generated billions of dollars in value for long-term holders through compounding share price gains and dividends. And importantly, the position has not been a one-time trade. It has remained large over time, which suggests that in Gates' view, there may still be more upside left in the story. Republic Services is not a small regional operator. It's a major public company with a market valuation of around $65 billion. So we're talking about a big trash business. Now, here's the key asset that explains why this business can be so valuable: landfills. Because in the US, landfills are not easy to build. They're heavily regulated, permitting takes years, communities fight new sites, and environmental standards are strict. So instead of increasing over time, the number of landfills has actually gone down. Roughly speaking, about 10 years ago, the US had around 1,500 landfills, and today that number is closer to 1,200. So while trash keeps piling up, the places allowed to dispose of it are becoming more limited, and when something becomes scarcer, the assets that remain become more valuable. That scarcity shows up in ownership concentration. Republic Services controls about 17% of US landfills, which puts it just behind Waste Management at about 21%, and a meaningful share, around 27%, is owned by local governments. So what does Republic actually do? Step 1, collection. Republic collects trash from residential and commercial customers using its truck fleet, tens of thousands of daily routes. Step 2, transfer stations. The trash often goes to a transfer station where it's compacted and consolidated into large trailers to make transportation cheaper and more efficient. Step 3, recycling. Along the way, recyclable materials are separated and processed at recycling facilities, turning waste into commodities like cardboard, metals, and plastics. Step 4, landfills. What can't be recycled goes to landfills, where Republic controls a huge amount of the nation's disposal infrastructure. Step 5, landfill gas, energy. And this is where it gets even more interesting. At landfills, methane can be captured and either turned into electricity or upgraded into renewable natural gas, which can be sold into pipelines and energy markets. So Republic is not just trash pickup. It's a vertically integrated system: collection, transfer, recycling, disposal, energy. Before we go further into the company's operations, let's do something different and look at the stock performance, because I assume by now you're absolutely thrilled to keep watching piles of trash. If you pull up the 10-year chart, one thing stands out. The share price has recently fallen from around $260 to about $215, which is roughly a 16% decline. And technically, you can see the stock has often tracked its 20-day moving average fairly closely. Right now, it's trading below that line. Historically, it hasn't spent much time far below that short-term trend before mean reverting. So for value hunters, this kind of dip can be the type of moment where people start paying attention again. On dividends, Republic is not a high-yield stock. The dividend yield is just over 1%. So if someone is purely chasing yield, this won't look exciting. But the quality signal is consistency. The dividend has grown for about 22 years, which suggests the company has steadily expanded profit and cash generation and returned a portion to shareholders through multiple cycles. And the payout level is meaningful but not reckless. Out of every $100 of profits, the company pays around $35 back to shareholders, so roughly a 35% payout ratio. Now, the valuation context. Historically, the company's PE ratio has often been around 30. At its all-time peak, it reached about 36, and currently it's around 31, which puts it in the zone that many investors would describe as near fair value for a high-quality defensive compounder. Now let's look at RSG's returns, because this is where the compounder story shows up. Over the last 10 years, the stock is up about 495%. That's roughly a 6x return. Zoom out further and you're looking at about 870% over 15 years and roughly 1,1250% over 20 years. What's interesting is the pattern. It's not one explosive year. It's mostly steady green years. Finally, ownership. The shareholder list tells you this is not a trader stock. This is heavily owned by long-term capital. Bill Gates Cascade about 35% ownership, Vanguard about 6%, BlackRock about 6%, State Street about 3%, Capital World about 2%. So the setup is clear: a defensive infrastructure business, durable cash flows, long-term dividend growth, and concentrated long-term ownership, now trading after a meaningful pullback. Now, to understand how the company has delivered those kinds of returns, let's come back and break down the business, starting with how its operations actually work. Scale. How big is this operation? To understand Republic Services, you have to understand the scale. This is not a small hauling company. As of December 31st, 2024, Republic operated across the United States and Canada through a massive physical network. Here are the key numbers: 367 collection operations, 248 transfer stations, 75 recycling centers, 208 active landfills, 2 treatment, recovery, and disposal facilities, 23 treatment, storage, and disposal facilities, TSDFs, 5 saltwater disposal wells, 14 deep injection wells, and 1 polymer center. And it doesn't stop there. Republic is also engaged in 79 landfill gas to energy and other renewable energy projects, and it carries post-closure responsibility for 125 closed landfills. Republic Services has a footprint across most of the US, and yes, even Alaska. Hawaii is the one place you don't typically see them on the route map. And for anyone following the headlines, no, they don't operate in Greenland, at least not yet. They do, however, operate in Canada. This is where the story upgrades from trash company to materials company. Republic is pushing hard into plastic circularity, meaning they want to take post-consumer plastic from curbside recycling, process it at scale, and sell it back into the economy as usable raw material. A key part of that strategy is the polymer center concept. Republic opened a first-of-its-kind polymer center designed to process post-consumer plastics into higher quality recycled materials, specifically recycled resins that can be used by manufacturers. And the goal here is not small. The polymer centers are expected to produce more than 100 million pounds of recycled plastics annually. But Republic isn't stopping at one facility. The company also partnered with Ravago to create Blue Polymers, LLC, which focuses on the further processing and manufacturing of recycled plastic resins, moving Republic further downstream into higher value products. And the scale ambition is clear. 4 facilities are planned, with major facilities under construction in Indianapolis and Arizona. After these are built out, the combined output is expected to reach around 300 million pounds per year. Now let's talk methane, because this is one of the most underappreciated parts of the landfill business. As organic waste decomposes inside a landfill, it naturally produces landfill gas. If you release that methane into the atmosphere, it's a climate problem. But if you capture it, it becomes an energy product. Republic Services is already operating at meaningful scale here. The company collects over 70 billion standard cubic feet of landfill gas annually. And its renewable energy portfolio includes 79 landfill gas to energy projects, including 27 renewable natural gas projects, 37 electricity projects, and 8 thermal energy projects. So the landfills are no longer just disposal sites, they can also function like long-duration energy assets. And Republic isn't treating this as a small side project. It's tying it directly into its long-term strategy and sustainability targets. So when you step back, the story becomes very clear. Republic is trying to move beyond being just a trash company and expand into 2 higher value layers: materials recovery and renewable energy, both of which can create additional revenue streams on top of the traditional landfill and hauling model. Republic also has a segment called Environmental Solutions. And yes, this is closely connected to the US Ecology acquisition, which was completed in 2022. That acquisition expanded Republic's capabilities in handling more complex waste streams, including hazardous and specialty waste, and strengthened its positioning as a single-source partner for industrial and enterprise customers that need compliant collection, treatment, and disposal across multiple locations. And importantly, this is no longer a minor add-on. Environmental solutions now constitutes around 12% of the company's total revenue. Quick reminder, if you're finding value so far, please like and subscribe. It supports this work a lot and helps the channel grow. Financial story, what the audit report and statements actually show. Now let's move from the real-world trash flow into the financial statements, because this is where you see why the business is so durable. Audit angle, why landfills matter. First, on the audit side, Republic's auditor is EY, and one of the important areas they focus on is landfills, mainly because landfill accounting involves judgment and complexity, especially around valuation-related estimates and long-lived asset assumptions. And overall, the internal control environment appears solid. Balance sheet, what the assets really are. Now look at the balance sheet. One of the biggest items is property and equipment, which is about $12 billion, roughly 37% of total assets. And what is that property and equipment? It's primarily the company's hard operating backbone, landfills and vehicles. Republic operates around 208 active landfills with total available disposal capacity estimated at about 5 billion in-place cubic yards. And it runs a fleet of around 18,000 trucks. They're also modernizing the fleet. Republic has a target that roughly 50% of its trucks will be EV trucks as part of its sustainability roadmap. Now, the next major balance sheet item is goodwill, which is almost 50% of total assets. And the reason goodwill is so large is simple. This company grew through big acquisitions. The biggest historical deal was the acquisition of Allied Waste Industries in 2008 for about $1 billion. Which helped Republic become the second largest non-hazardous waste management company in the US. After that, goodwill was further boosted by the US Ecology acquisition in 2022, plus various smaller acquisitions over the years. And on capital structure, Republic's debt-to-equity ratio is above 1, reflecting how the company has used debt strategic to expand and scale operations. Income statement, steady compounding. When you look at revenue, the trend is exactly what you'd expect from a scaled essential service business, continuous increase. Over the last 10 years, revenue has increased about 75%, which works out to roughly a 6% CAGR, and profits have nearly doubled, roughly a 7% CAGR, which tells you the company isn't just growing, it's also improving the earnings power of that growth. Cash flow, where the engine becomes obvious in a fry set. Now go to the cash flow statement, because this is where the compounder narrative becomes very clear. Republic is generating strong operating cash flow, around $4 billion. And importantly, cash flow from operations has nearly doubled over the last 5 years, which is a strong signal that operating scale and pricing power are converting into real cash. To fund growth, the company has continued to use debt. It obtained a loan of about $900 million, in addition to the $2.2 billion loan obtained the prior year. At the same time, it's returning capital to shareholders, about $687 million paid as dividends, and around $480 million through share repurchases. Of course, higher debt means higher financing cost. Interest expense is now meaningful. Republic is making interest payments of over $400 million per year. And where did the cash go? The company is reinvesting heavily. The proceeds from operations and financing were mainly used for capital expenditure of about $1.8 billion and acquisitions of about $753 million. So the big takeaway from the financials is this: Republic is running a classic scaled infrastructure playbook. Generate strong operating cash, reinvest into the asset base, acquire where it strengthens the network, and still return cash to shareholders. That's exactly how a boring business quietly compounds over time. Quick disclaimer, this is educational content, not financial advice. Why the long-term tailwind is real. America produces more waste. Here's the macro argument that supports Republic's long-term story. The US is a consumer-driven economy. Think about it. Online shopping boxes, food packaging, home deliveries, construction waste, convenience culture creates one unavoidable byproduct: more trash. And the data supports that direction. According to the US EPA, the US produced about 246 million tons of municipal solid waste in 2005, and that rose to about 292 million tons by 2018. In a consumer economy, it's reasonable to expect the long-term trend to keep moving higher. According to the World Bank, global solid waste is projected to rise by about 70% by 2050. So when you zoom out, Republic Services is a simple business with powerful economics underneath. This is a highly regulated industry where new landfill permits are extremely hard to get. So incumbents keep scarce assets, pricing power, and protected market share. That's why Morningstar rates RSG a wide economic moat, and Guru Focus scores its moat 7 out of 10. It's also recession resistant. Trash collection is an essential service, and Republic isn't just maintaining the core, it's expanding into higher value growth areas like environmental solutions, boosted by the US Ecology deal, and renewable natural gas from biogas, adding new revenue streams on top of the traditional network. Bottom line, many investors view RSG as a well-managed defensive compounder, but with quality compounders, entry price matters because overpaying can still lead to average returns even if the business keeps executing. If you got value from this breakdown, hit like. It helps the video reach more people who enjoy undercovered compounders. Subscribe if you want more deep dives on businesses that don't look exciting on the surface, but quietly build wealth over time.